let's get into today's market action on this Wednesday, July 30th, 2014. Markets are down really almost across the board. The only thing that is bucking the trend is the NASDAQ today. NASDAQ currently is up 9 points, but the interesting thing about today's market action is we are seeing the markets well off the highs of the day. So the markets gapped up today on a very strong GDP report. All right. We also got ADP non-farm, the private sector jobs numbers, and those came in a little bit below expectations. But the GDP number initially sent the markets dramatically higher. Now, you might say to me, "Well, why did the market sell off on a good GDP number?" The answer to that is very, very simple. Essentially, what happened today was a better than expected GDP number means the Federal Reserve may decide to cut stimulus faster or raise interest rates quicker than first anticipated. The market does not like that. The market has been enjoying the Kool-Aid for a long, long time, and it's very unlikely that the market wants to see interest rates begin to go up. So if you look at the TBT today, which tells us what interest rates are doing, good indicator. Look at that. Look at that dramatic move up. And again, the TBT for those home gamers there, it's an easy way to tell what the interest rates are doing, the yields are doing. And just to give you a sense, the 10-year bond rate, the yield is up 4% on the day. That's a big, big move, trading at 2.558 right now on the 10-year. So again, rates up, market doesn't like that. The one sector it is good for is the banks. The banks then can charge more interest on loans and make more money. So if you look at Goldman Sachs, even with the markets down today, Goldman Sachs is flat on the day. If we look at JP Morgan and Chase here, up 2 cents on the day right here. And yes, it's off its highs as the markets have sold off, but it's still holding up relatively well compared to down 65 on the S&P, down 4.5 on the S&P. All right, so again, Dow is down 65 on the and the S&P is down 4.5. Okay. So that's what we have going on right now, folks. I am keeping my eyes and ears open for potential setups here, and a couple things I'm looking at. I'm looking at potentially picking up some options on Disney, some puts on Disney. I like the daily chart pattern there. I'm not sure if I will yet, but I'll tell the Research Center members if I do. Corn, CORN, is getting my attention. I may be interested in buying that as it looks like it's putting in a little bit of a short-term bottom. Also, if the dollar pulls back today off a big move on the Fed, you might get a pop out of corn. You can see the dollar's up again. Here, this is the UUP chart, which is the ETF that tracks the dollar. But look at this move on the dollar recently. Just a skyrocket. Really what you're looking for is an ideal push up to this line right here, which is around 2182 or so, and that would be a great opportunity there, in my opinion, for a good short. So we'll watch that very, very closely here on the dollar chart. If we look at gold today, gold ahead of the Fed down slightly, and that's in response to the dollar being up. A lot of people would say, oh, well, the markets are selling off. Why isn't gold rallying on a little extra fear? And the answer is simple. The dollar being up so strong today is taking mustard away or gas away from the gold trade. Oil today, you can see here, down about 30 cents. And again, not surprising considering the dollar's strength. And also the GDP number, very strong. But remember, it's not about the strength of the GDP number. It's about what the Fed will do in response. And that's what this is all about, folks. The market doesn't care about any economic number. All they care about is what it makes the Federal Reserve do. And remember, for years now, since 2008 or so, we've been addicted to stimulus by the Federal Reserve. And because of that, the markets just look at the Fed. What's the Fed going to do? How's this going to affect stimulus? How's it going to affect interest rates? All right. So that's a couple interesting little factors there. If we take a look at Apple today, Apple's down about 40 cents. Apple's still hovering just below the 100 even number. I still think, again, today will be the day where we find out if this market is going to make one more quick high to the even number on the S&P of 2,000 and the NASDAQ high of 4,500, or if we're going to just start selling straight out. And again, you'll have bounces along the way. But the reason I say that is if you go to the daily chart of the S&P or the SPY here, this is a little tough to see, but notice how we're below yesterday's low. That tells us if we close below yesterday's low, we confirm a downtrend. All right, to me, we confirm a breakpoint of the major upsloping trend line, and you can see that right here. So here was your upsloping trend line yesterday. For the second time, we closed below it over the last few months. All right, only for the second time. The first time we closed below it, we didn't confirm. There was no confirmation, and that causes an issue there. So you have to have confirmation, and I think today the Fed will create a move, either dramatic sell or dramatic pop, and they may be able to save it, but they may not. And that's why I think today is a major indicator of which direction this market will ultimately start heading. And right now, if we were to close here, we'd confirm. But remember, the Fed is at 2 p.m. Eastern time. So in basically 30 minutes, 35 minutes from now when I'm doing this video, we're going to see a move up or down on this market, and that should give us a good bias, all right? And again, just to zoom out, you can even see this head and shoulders pattern that's actually triggered now. Shoulder, head, shoulder, upsloping trend line right here, which actually marks this area right here, and that is a neckline break. And so right now, this market's in not a pretty position. Now, the question is, can we see a rally? Can this market kind of catch its breath and rally on the Fed? You know the Fed's going to try. I don't foresee the markets. I don't foresee the Federal Reserve doing something on purpose. The question is, do they change their verbiage just enough to kind of freak the markets out? All right, or do they come out and just say whatever the market wants to hear to get it back up? I mean, that's what they've been doing for the last 5 years, 6 years, 7 years. So what's going to change their philosophy now? And that's the question. Okay, so that's what we have going on there, guys. And on the SPY, the Qs are stronger. As I mentioned, the NASDAQ's doing better today. Obviously, Twitter is helping that. Twitter had good earnings. Even though the Qs are near the lows of the day, look, still up 16 cents on the day on the Qs. That's the NASDAQ 100. And it's all because of this stock right here, which is off its highs, but still up 20%, 21% on the day. I actually day traded Twitter after hours yesterday. So this is what happened, right? So the stock traded up to $50 after hours yesterday and pierced it. I shorted my first lot at 50.21. Then I shorted, doubled that on a short above 51, and I doubled that again. So basically, I started with 500 shares. I did then 1,000 shares at 51 and change, and then 2,000 shares at 52 and change. So I ultimately had 4,500 shares. Check that, 3,500 shares when it got above that 52, and it came all the way back down to 50 break. After hours, went to about 49 and change, and I just kind of banked that money within. I think I gained, I don't know, 3,000, 4,000 bucks on it or whatever. I mean, it was a decent trade, but overall, I could have made a lot more if I held, but honestly, I'll take that money any time of the day. All right, so that's what we have going on here, guys. Let me just scan through, see if there's anything else on watch here. If we take a look at Amazon, Amazon got crushed on earnings. It's still kind of just trading in that lower range. Could be making a bearish pattern. Stocks that I am watching, I still think Alcoa, if it ever gets to 18, is a great shorting opportunity. Zillow continues to be under a little bit of pressure after that fall yesterday off of the big pop. Take a look at Zillow. Had that big pop when they announced they were going after Trulia and ultimately trying to grab Trulia for $3.5 billion. And that, again, has faded a little bit, but not that much today. And let me just see. Oh, yeah, U.S. Steel reported earnings, guys. Look at this stock today. Up 20% on U.S. Steel. And this actually gets my attention because it could mean other small-cap steel stocks should be paid attention to. So, I mean, it's nothing that I'm running after right now, but it does kind of pique my interest, and I'll start watching a little bit more closely on some of these other small-cap steel stocks, maybe some Chinese steel stocks. We'll have to kind of see if they start to wake up just a little bit. IBM's down a little bit today. We have Disney up today, bucking the trend, and Chevron's down again today. Chevron's actually had a great fall over the last few days. They report earnings Friday morning, so 2 mornings from now, you'll get earnings from Chevron. Hewlett-Packard's flat on the day, down a penny, and that really just kicks the cans into the Federal Reserve statement at 2 o'clock, which is now 30 minutes away, folks. So we're trading near the lows of the day, waiting on the Fed. What's it going to be? That's the big question. I know I will be trading. A great day trading day in the intraday stock chat today. Tons of trades, spiders trades, you name it. There were trades out there galore, and Garmin was a nice one out there today. That stock getting hit today, gapped up and then just reversed. It gave us some great scalping opportunities. Buffalo Wild Wings, another great scalping. BLW, what is that? BLWD, BDW, I don't know. I forget the there. No, that's not it. BWLD, I think it is. There we go. Buffalo Wild Wings. You can see how much that's getting hammered. We played it on this latest bounce right here at the 44 Pierce. Now it's actually gone lower. But this stock down over 15% today. It's a big drop for that stock. So bottom line is great trading right now. This is what we want. This is what we dream about. Now let's get the Fed out there, and there'll be more trades this afternoon. Come take the 7-day free trial to the Research Center. Remember, that's swing traders and investors. If you're a day trader, be in the intraday stock chat. 7-day free trial to that too. Take care.